Hey traders, Raghee here. Happy Friday, everybody. Welcome to Charts and Coffee. I hope everyone's doing great. I hope the week has been treating you well. I hope you've got some coffee to carry you through this morning. Let's talk a little bit about this morning here, because one of the things that you'll notice that we have going on intraday is some volatility here on the morning. And remember that we talk about this quite often. One of the things that you want to make sure that you are keeping tabs on is the economic calendar. So let me do this here. All right, so one of the things you want to make sure you're keeping tabs on are the economic calendar events. And of course, we've got non-farm payroll to kick off June. And you'll take a look at the numbers here. Payroll came in at 559. Expectations were up around 645. And I believe we had I think there was a revision higher, slight revision higher from the previous NFP. So that is your 8:30 volatility. Clearly, the market liked it. You see the move higher on the S&P on that release. That should then trickle into the open at 9:30. So for the bulls, for the buyers, for the traders keeping an eye on the overall movement higher in the market, especially in the two best broader index, the broader market corners of the market, S&P and Dow, we're continuing to see that strength. That's where we want to continue to look for our intraday, day trading clarity, that directional bias that increases the probability day after day after day of being on the right side of the momentum and the trend. And that's going to come from the daily. In fact, there's about 6 different things that I look for on a daily time frame, from patterns to candles to different calculations that I do, that then affects how, when I want to be positioned intraday. So, even if you're a short-term trader, don't neglect the daily. Remember to pay attention to it. It will tell you a lot about the overarching opinion of the market. So that's what we've got here this morning. In terms of the NASDAQ, remember, that's not a trending market right now, and neither is the Russell. So if you're looking for continuation and clarity, one of the things we've been talking quite a bit about in Sector Secrets and in the futures room is, where are the stronger corners of the market? Where are the sectors that are heavily weighted within the indices that are doing better than, in many cases, even the indices, right? Certain corners of the market are still looking very, very 2020-esque. So who doesn't want some of that? And there's plenty of that existing in this market. Sometimes you've got to look short term. Sometimes you can focus on long term, but the watch list building and that discernment is just more important this year. And it will be more important throughout your career than last year's buy everything market would indicate, right? The markets are typically not like that. I think a lot of you know that. So let's get to our first question. And hey there, James. Good morning. Looks like we're getting another minor low in XLV. So XLV was a play where I wanted to pull back. And what happened is, and this is fine, I factored that in. I just really did not think the 7th or 8th go around of the ACA in the Supreme Court, that was the reason for the pullback, the way we saw it. I didn't think we'd see that much drama. I thought it would trigger a pullback, but not the sort of drama that we're seeing. Now, of course, remember the typical cost of options that we're in, and you realize the kind of heat we're taking is really a paper cut, pretty negligible. We also have exposure to Pfizer, which is holding a little bit better. So after we saw the way in which price action adjusted for that ACA Supreme Court decision, here's the flip side of this particular go-round of the Affordable Care Act in the Supreme Court. The High Court's going to be ruling on this, like I said, the 7th or 8th time. I bought every previous dip when it comes up for that type of volatility. And this one is probably a little bit more dramatic than the previous, but it's a setup that I've been looking for. And I think Pfizer's doing all right with this. And I do think the XLV, especially from our moderate conservative zone, should be able to withstand the slightly deeper correction, which means Don't mind letting the aggro go with a paper cut. Paper cut. What do I mean by that? Those of you that are not part of the Sector Secrets group, what do I mean by that? What I mean by that is no one position or group of trades should have or threaten risk of ruining your account. I do not believe that blowing up an account is a rite of passage as a trader. It's just a simple misunderstanding of the arithmetic of position sizing. And position sizing and risk management is the holy grail to trading. There is no other. You know, the story I like to tell is when you watch these big hedge fund conferences, like the SALT or whatever those conferences are, where the hedgies get to interview one another, they'll kind of play coy and they'll talk about this, that, and then they'll go for the kill. One will usually ask the other about position size. And it's amazing how cryptic the conversation gets as soon as that happens, because these guys know I'm not going to tell you my position sizing because that's why I win. That's how I win. And you'll realize just how quiet they are about position sizing, which also extends to the way in which they focus on certain sectors, the way in which they position size that sector, you know, how much they're willing to commit. There's a lot that goes into that. Anyways, we've looked to do that with this XLV move by moving into a relative outperformer with Pfizer. So I would not add. There's no adding here. We're in. Let's not, in the position sizing, respecting, not letting a single position be more than, just a paper cut. No losing fingers. We have our trade in. Let's leave it be. And we'll look elsewhere for clarity and a little less volatility. All right, next up is, are we long? So Debbie, we have plenty of time to expiration. You'll notice that's another thing that we do. A lot of traders, in an effort to keep trades in a certain budget of affordability, which of course relates back to risk, they'll position sized with really near-term expiration. That's a disaster. That's the old saying, I didn't lose, we just ran out of time. An old saying in sports, right? We didn't lose, we ran out of time. I don't ever want to be in that position chronically in my trading. So you'll notice we're not lacking for time. So as long as we can manage, I would say for some of you, you might want to let the aggro layer go if you're in that. If not, I think moderate conservative are actually doing pretty well considering the volatility that we've got. And that's the only place in our book right now that we're actually dealing with that kind of volatility. Our XLP position that we took the same day we took Pfizer, if you recall, that's doing fantastic, a terrific play on the defensives where we have a great uptrend, and that particular corner of the market is going to fare far better in terms of volatility. It's going to fare far better in terms of if we do get a pullback, if we do see a lot of volatility, XLP and that uptrend and that position should be a fantastic steady winner for us. So, think about where else, other than just keeping the focus on that XLV, we're positioned. We've got our skin in the game. We're not going to continue to build an outsized position or outsized problem. We're going to look for where else there's opportunity. We'll wait for another pitch, right? Moneyball. Let's just find other trades that will just get us on base. All right. And thank you for the questions. XLC. Hey there, Eric. I have an XLC with expiration June 18, 77 calls, taking a little heat on this one for now. Nothing to cry about. So I don't want to get too concerned with seasonals until, Eric, I know whether or not the seasonals have been in some sort of synchronicity with current price. If seasonals are not in some kind of parallel movement with the current rhythm of the market, don't worry about the seasonal. Don't get trapped into looking at a block of 2 weeks or 2 months or whatever of seasonal and saying, oh, that's the tendency, if the current price action has not been respecting that tendency. Does that make sense? So if you're in any corner of tech, this is probably a pretty good one to be in. And yes, in many ways, you're going to be relying on Facebook and Alphabet to carry this market higher. Disproportionate weighting of those two names in XLC is going to dictate what it does next. The Qs moving higher sure wouldn't hurt. But, if you're long any corner of tech, that would be the one. Of course, now you've got theta decay. So, but I think you're actually bouncing down to that 21 exponential. I don't know that we're going to see new highs, but as you said, running out of time, I wouldn't be surprised if we head up towards 79. I'm not looking for new highs between now and then, but to keep with the overall probability. I mean, I think the path of least resistance is up, and you're getting a pullback now. So let's look to see if this market is going to, break out of this little range we saw on Thursday. You can see the back and forth range here. So let's see if it can't break out of that and give you a nice return to 79. And that should give you a good spot to hit the eject button and call it a day on that position. All right, so next up is what's in the cup today? Kona pea berry. Kona pea berry, a little bit of creamer, and my Ceylon cinnamon in there mixed all up. All right. Is this the easiest money that Wall Street has ever made? Yeah, it's funny. I don't play the meme names. I just don't. I've got my GameStop Power to the People shirt on. I don't play them as a general rule. I like sticking with things that I know. It's Moneyball, right? When I say Moneyball, we're going for probabilities and the likely statistics and getting on first and second. No one remembers the team that just gets on first and second, drives in RBIs until, they win the pennant. So that's the kind of trader I am. I like watching the drama unfold, but I don't engage in it at all. But is it easy money for them? Look, for the most part, in terms of the retail order flow, yeah, probably. I would have to think that, they're going to have their way with a lot of retail traders who don't understand the game. But there's two types of traders that'll enter this Wall Street Bets realm. The ones that figure it out, and this is their introduction to the wonderful world of trading, and they learn and they continue to move forward. Or it's going to be where a lot of people suffer because they didn't come equipped. Knowledge, education, that's the difference. That's the difference. But generally speaking, I love anything that democratizes the markets. I love when retail traders get involved and learn, and then realize that you don't have to be a hedgy. And quite frankly, most of those guys aren't that smart, straight up. There are some exceptional ones, but you'd be shocked at, sometimes when I meet some of these folks who are either PMs or whatever, I'm actually appalled. I will always root for the retail trader. I will always root for the person who has skin in the game, right? I'm not talking about the whole lot of them, but a lot of these people that manage money, you would scratch your head. I trust that you care more for your money than anybody else does. So yeah, I'm all for the retail, self-directed, educated trader. I think we could absolutely play this game and win. We just have to know where we are within the scope of the game. We need to know where we are within the hierarchy. And I think the smart Wall Street Bets traders understand that, and they're playing that game. All right. So what do these job numbers mean for the macro? Not a darn thing, Seth. Onward and upward with the same reflation narrative. Look, anytime we get a jobs number, great question, by the way, Seth. Anytime we get a jobs number or an inflation number or a growth number and the market responds bullishly to it, that means the market is A, B, C, and D, thinking the Federal Reserve is not changing their current monetary policy. They're going to stay on with the asset purchases. They're going to stay on with the money printing, and they're going to stay on with the accommodative policy. If that is the case, which I believe it is, then I don't believe the macro gears have changed one bit. So great question. Hey there, Gavin. Thoughts on energy? Well, this kind of leads terrific follow-up to Seth's question. There is not a darn thing that I don't like about energies, because in a reflationary environment, let the commodities go first. And again, that knock-on effect. Let the commodities go first. So we want to make sure that names like crude oil and names like RBOB continue to move higher. That's your energy. I mean, heck, we even have exposure in natty gas. So natty gas, crude oil, RBOB, generally speaking, moving higher. If that's the case, what we have are the likes of XLE. There we go. XLE, OIH, and XOP moving higher. XLE is Chevron and Exxon. OIH is Schlumberger and Halliburton. These are the heaviest weighted stocks within those ETFs. And XOP is a non-high concentration weighted ETF. But take a look at the names within the XOP and you'll find a lot of familiar names. And you'll think, oh, of course, these stocks are going to move higher as long as the underlying crude does move higher. And what's great about crude and RBOB right now is they have already discounted the OPEC increase in output, which is typically any increase in supply is going to be bearish for a market, and crude oil's just marching higher. So that tells you a little bit about the reflation trade that's at play here in crude. And then I think crude and RBOB especially are benefiting from the reopening trade, right? So we got reflation, reopening. What other re are we could thinking of? Other than Rihanna, that's it. It's got everything else the market would want. Okay, so next up is any insight on Home Depot. Yeah, Home Depot's been an odd laggard. I think it has a lot more to do with ITB and XHB. Look at Home Depot. Doesn't that look a lot like it? So if you're wondering, when is Home Depot going to get out of its own way, keep an eye on ITB, keep an eye on XHB. And I would say, remember that this is a yellow. Well, let's dive into this a little bit. Take a look at Home Depot. And I've got my full complement of indicators on these charts. And I'm looking at this Darvis level right here. That definitely gets my attention. It's definitely getting my attention there. So we've got this Darvis level there. Let's take a look if that coincides with ITB. Not too bad. XHB, not too bad. So do you see there? This could be a nice oversold zone to take advantage of Home Depot. Post the dividend, I do anticipate a little bit of weakness, which we're seeing. Post dividend, this might be one worth keeping an eye on. Where it is right now, right? Where it is right now within the confines of this yellow, you can see down here, yellow non-trending market, but a market that definitely carries with it the bias of the previous trend that was heading higher. So this is an oversold priority, a bullish priority. And actually, I like that. I'm going to write that down. I like that one a lot. We've been keeping an eye on ITB, XHB, but Home Depot could be an interesting one, which means before you just run headlong into Home Depot, crack open. Well, let me show you what I'm going to do here this morning. Crack open your multi-chart. So this is a layout that I've used to basically look at the way in which the heavily weighted stocks within an ETF or within an index are behaving. So the smart thing here would probably be looking at, well, take a look at the stocks that are chopping after the uptrend and are down near their lows. And Home Depot is not exactly an inexpensive name to trade. So you might look at DHI. You might take a look at, what else could you, oh gosh, I'd look at Pulte. Pulte could be interesting. Pulte could be very interesting. I would definitely take a look at CAR, Pulte, Whirlpool. So CARR. This is how I watch this, Bill gang. You're watching it right now. It's not magique. It's just looking at relative outperformers with a set of tools that have given me an edge in terms of identifying the structure of the market and then being able to quickly pluck out the relative outperformers. That's XHB. I would do the same thing in ITB. All right. So great question. And David, do you see how a question about HD then opens the door to a larger understanding of what HD is tracking with, not the Dow, right? But rather this narrative in XHB and ITB. At Home Depot says, hi, come on over. But we get to the party and realize, well, there's a lot of other stocks we might want to check out. All right. So thanks for the question. We'll definitely, you know what? While I'm here, I know we're out of time, but let me just finish the thought. And then, of course, wherever your next stop is here in our simpler trading universe, the bell's about to ring in about 9 minutes. So ITB, I would say, Sherwin-Williams. Hello. SHW. There's Pulte Homes again. Toll Brothers might be one to keep an eye on. I think those are looking really good. So in that narrative, Home Depot kicked open the door. Look what came after it. 5 different names we'll take a look at here for a potential opportunity. Good stuff. Good stuff. All right. Next up is, well, I really should wrap it up here. So thanks for being part of the Charts and Coffee family. I do appreciate it. We have a great crew, fantastic questions. Enjoy your weekend. And well, it's a non-farm payroll Friday. Be careful in terms of volatility. I kind of have this funny reminder to the traders. Friday hates traders sometimes. So be aware of wanting to overdo it on a Friday. The end of the week, the end of the day, the end of the week, the end of the month, the end of the quarter, the end of the year, the behavior at the end of fill in the blank is oftentimes very different than the beginning of something. So be careful on a Friday. I'll see you all on Monday. Thanks as always for spending some time with us here at Charts and Coffee. And be good to each other, gang. Talk with you soon.